We are starting with the live. Okay, and now we are live. Right, we are live now. Good ma. Good ma. We are live now. Okay, friends. So welcome to CAclass.live, and this is Vyas teaching you accounting for CA Foundation as of now. And we in this channel, friends, you will be getting the entire CA Foundation accounting, quantitative aptitude, law, economics, business and commercial knowledge, communications, everything absolutely for free of cost, targeting your November batch, right? So November 2020 and thereafter in the new syllabus, right, friends? So please subscribe to our channel and please click the bell icon so that whenever we are coming live, whenever we give you any free updates about CA courses or exams, you will get it definitely and you will not miss it. Right, friends? So today's our topic is going to be the special cases in relation to journal entries. Right, friends? So till date, we have already covered few topics, friends, which I'll show you right now. So till date on 15th of July 2020. So till now we have covered what is meant by accounting process we have covered, and we start with journal entries. In journal entries we discuss some basic journal entries and how do we actually see the modern approach, how do we follow the modern approach of accounting we have discussed, and we have discussed trade transactions, we have discussed accrual transactions, and today's topic is going to be on special transactions, friends. So we are going to take some list of some special transactions and then we are going to discuss them. And then tomorrow's session will be on ICAI textbook questions, friends. We are going to solve ICAI textbook questions. Okay, so for tomorrow's class at 4 p.m. you are going to be ready with your ICAI textbook in front of you with your notebook, so that we'll be discussing textbook questions, right, friends? And then today's class session, friends, is more or less about these aspects we are going to discuss. What are those aspects? Cases where purchase account is credited. Sir, purchases is credited. Yes. Wait, I'll discuss that. Next, special transactions in relation to capital account, in relation to capital account. So what will be the special transactions? And asset related transactions, how are you going to take asset related transactions? And bank account related transactions, few bank related transactions, how are you going to consider them, is what we are going to discuss in today's session. Okay, friends. So some of the items which are missing in our discussion we are covering now, and so that tomorrow's session we can go to the textbook questions and we can solve all of them, right? So don't miss, please subscribe and please click the bell icon so that tomorrow whenever we are coming live you'll be getting the notification as well. Right, friends, now let us start. So our first topic is cases where purchases account will be credited. Purchase account will be credited. Sir, why is this a special case like this, sir? Why are you discussing a special case? Very simple, friends. We all know very well purchase account is a part of expenses. Correct ma? Purchase account is a part of expenses. Expense will have which balance ma? Debit balance. Correct ma? So obviously whenever you do purchase, obviously it should be debited now. But why are you saying it will be credited now? That is where you have to understand one small point. Okay, friends. Now already explained you, purchase will be expense only if your intention is to resell your goods. Correct ma? Purchase account will become your expense only if your intention is to resell. Imagine if you don't have the intention to resell, obviously you cannot call it as expense. You cannot call it as expense. Correct ma? All of you agree with me? So initially while purchasing I have the intention to resell, sir. But later on my intention to resell has changed. It means I'm not going to resell the goods. Sir, without reselling, what will you do with the goods, sir? That is our discussion for the day. Right, friends? So what what will I be doing with that goods? Observe listen to me very carefully. What will I be doing with that goods is I will not sell, instead I will do something else with that. In that case, intention to resell has changed. That's why purchase account should be reversed. Because it is to be reversed, we will credit it. Because purchase account is to be reversed, we will credit it. Got it, friends? What are those cases, sir? My first case, let me take. For example, if owner withdraws goods, that too for personal use. So what did this fellow do now? Owner, he has withdrawn goods. He has taken goods from the business. And for what purpose? To use it at his home. For example, I am running a provision store, friends. At my home also I require provisions, right? Rice, wheat, everything I require, right? Now imagine being a owner of provision stores, shall I go to some other shop and buy them? No, Namma, for my household purposes, I'll have to purchase it from my own. I will take it from my own shop. I'll not purchase from my own shop. I'll take it from my own shop and take it to home and use it at home. Correct, my dear friends? That's the process. So here, what am I trying to do? Earlier, you purchased those stock for the sake of resale. Your intention was to resell them. But now, are you reselling it? Are you reselling it now? No, you are using it for your personal purpose. Because your intention to resell has changed, what you have to do? First, you have to credit your purchase account, because you have to reverse it. You cannot call that amount as your purchase expense. You have to reverse it. So, two purchases. Now, sir, whenever owner takes some money or equivalent to money from business, what did we call? We called it as drawings, if you remember. Correct, ma? So, I will take that expense to drawings account. So whenever owner withdraws goods for personal purpose from the business, so what will be the journal entry that will be having, friends? Drawings account debit to purchases will be our journal entry, new journal entry. Got it, friends? Good. New journal entry, because here what is happening? The intention to resell has changed. That's why even I have changed my this one. Okay, Nama? Very good. Now, just a moment. I'll try to adjust the contrast a bit so that you can see notes much clear. Okay, I guess we'll have a better view now. Okay, so friends, that is the case. Next, that is for personal purpose. Second case, imagine if goods are given for charity. Goods are given for what, my dear friends? Charity you have given. My dear friends, what happened, one day, imagine you are running a stationery shop. Okay, Nama? One day, as soon as you open your shop, a group of orphans came to your shop and requested you, sir, we would like to study. We are from an orphanage. Please help us. So what did you do? Instead of giving money to them, they are kids and they want to study, Namma. From your stationery shop, you have taken some set of books, pens, erasers, pencils, scales and all these stuff. You made it a bundle and given to the kids and said, please study well. If you want further books, I can provide you. Please come back again. What did you do? Out of your stock, you have taken some of the books, pencils, pens, erasers and everything, make bundle and given. Correct, friends? So you have done a charity. That's fantastic. All of you have done a very good job. But from accounting perspective, what is happening? Earlier, for what purpose you purchased those books and all, ma? To give it for charity? No. Earlier, my purpose is to resell. But are you reselling it now? No, you are giving it for charity. That is the reason. What am I trying to say is your intention to resell those goods have changed. You are not selling them. That's why your purchase account should be credited. Got it, friends? Now, purchase account is credited because the intention to resell has changed. Your intention is no more to resell. Then what is that expense, sir? You can call it as charity expense. So, charity account debit to purchases. So what have you done? Your intention to resell has changed. So that's why I will decrease my charity because you are not reselling it and increase charity expense, charity account debit to purchases. Got it, friends? In this case also, what are you doing? Stock not sold. Understanding, friends? That's why I told you this example. Next, friends, what is my next example? For example, if goods are distributed as free samples. So what have you done? You have not sold, but instead you distributed freely. Free. Okay, I strongly remember one example where almost when I was in my 10th class, I guess, okay, when Head and Shoulders was newly launched, okay, Head and Shoulders brand shampoo was newly launched. At that time, only Clinic, All Clear, Clinic Plus, only those shampoos were there, okay, no other shampoos were existing. When Head and Shoulders actually launched, what happened was nobody were buying because it's a new brand, nobody knows about it. So what these people have done is, one day when we got the newspaper, to the newspaper there was an attachment, okay. What is that attachment is all about? Attachment is all about one cover, inside that a Head and Shoulders shampoo packet. One sachet was inserted into it and stapled to the newspaper. So what everybody have done, when you get something for free, Obviously you'll use it, namma. So what people have done, opened it, and that too, that fellow intelligently he made it on Sunday. Usually on Sundays many people will take head baths, right? Normally, I don't know what is the sentiment, I don't know, but many people will take head bath on Sunday. So on Sunday he gave it, and many people use that shampoo sachet, and everybody liked it. Till then, what will be the smell and feel that you get with Clinic? You know, suddenly they have changed. People liked it so much, and slowly people started getting into the shops and asked for Head and Shoulders brand now. Understand, friends? For that intention, what this fellow has done, he has distributed free samples. Understanding, friends? Here also, what have we done? Any product which is new to the market, which is not being distributed, which is not being sold, initially what we will do is we will give it as a free sample for our regular customers. Ask them. For example, you are running a condiment shop, for example. Okay, condiments, where you made a new food item. Okay, what will you do? You will give it as a sample. Sir, try this, sir. If you like it, next time you buy it, no problem. Take the sample and you will give samples, so that you will, once they are used to the taste, they will come back again and again and again. Correct, my dear friends? That is the logic behind that business. So here also what we are trying to do is, because the stock is not getting moved, what I have done, I am distributing it as free samples to attract the market, to attract the customers, and to make more sales in the future. Got it, friends? In this regard, am I selling the goods? No. But earlier your intention was to resell it. That's why you are calling it as purchases. But now are you reselling it? No, I'm not selling it. That's why my purchase expense should be reversed. So to purchases account, I have to reverse my purchase expense, no doubt. So to purchase account. Now what is this expense all about, sir? This expense will become I can call it as my free samples account, or in simple terms, advertisement expense account also I can say. Obviously, for what purpose you have given that free samples, my dear friends? For the sake of advertisement only, namma. That's why you can call it as advertisement expense also. Free samples or advertisement expense account debit to purchases. This is what is the journal entry that you can make. Next. Okay, sir, understood this example also. What is my next scenario, sir? My next scenario is all about, imagine if goods are utilized for construction of an asset. So what have you done here, my dear friends? You have not distributed it for free of cost. What have you done? You have taken some of your goods and used it for construction of an asset, my dear friends. Let me take an example for you. So what is this example is all about? Now imagine you are a cement dealer now. Okay, being a cement dealer, imagine you are constructing your own office building. Sorry, sir. For constructing your own office building, you require cement, namma. Will you buy it from some other dealer, or you will take cement from your godown? Obviously, I'll take cement from my own godown. Yes or no? So, being a cement dealer, I have taken cement out of my godown, which is my stock, and used it for construction of my building. Correct, my dear friends? That is the example that you have to understand. Okay, so here what is happening? You utilize the goods for construction of your own asset, and you are not reselling it. Because you are not reselling it, your intention to resell has changed. So obviously, what you have to do? You have to decrease your purchases. So I will say to purchases account. I will decrease my purchases, because you are not reselling it, but instead you are using it for the sake of your asset. Your asset value will increase. I will say, what are the asset that you are utilizing for? Asset account debit to purchases account. Asset account debit to purchases account. Got it, friends? Good. Now fifth case. I told I will discuss 5 different cases. We thought, okay, 5 cases we will discuss. Imagine if goods are used for repairs and maintenance. If goods are used for what purpose, my dear friends? Repairs and maintenance. For the sake of repairs and maintenance, I am using my goods. Got it? In this case, how journal entries will happen? Simple, my dear friends. One more example. Okay, let me take an example. Imagine you are running a big store, a multi, what do you call it? A big supermarket. Okay, you are dealing with a supermarket like more, okay, and such kind of stuff. Now what is happening? You have some vacuum cleaners kept ready to be sold. You want to sell some vacuum cleaners which you kept it ready for sale. Okay, now friends. But okay, and also for cleaning your own premises, you have vacuum cleaner separately. Again. You have vacuum cleaner separately to clean your premises. Apart from that, you have a set of vacuum cleaners separately for sale. Okay. Now what is happening here is vacuum cleaner life is not for lifetime, right? They will say guarantee, warranty, but once you use a vacuum cleaner for 1 year, 2 years, its life is gone. It means whatever be the money that we spend on vacuum cleaner is usually a maintenance cost. Whatever you spend on vacuum cleaners usually will be a maintenance cost. It will go off. Okay, fine. Now friends, observe very carefully. Imagine whatever be the vacuum cleaner, I'm using it for my own personal purpose, for cleaning my own store. That is gone. Okay, that is gone now. Now, will you buy vacuum cleaner from outside or will you take it out of your stock? So obviously you will take it out of your own stock, correct ma'am? You will take out of your stock and use it for repairs and maintenance. You use it for your maintenance of your store, correct my dear friends? So whatever be the vacuum cleaners you have in your stock, earlier what was your purpose, friends? Your purpose is to resell. But now are you reselling it? Absolutely not. I'm not reselling. That's why your intention has changed. So what I will do? 2 purchases, because I am not selling it, my dear friends. I'm not selling it. Instead, I'm using it for my own repairs and maintenance. I will say repairs and maintenance account debit, repairs and maintenance account debit to purchases. Repairs and maintenance account debit to purchases will be my journal entry. If you observe, in all these cases, what is happening? Your intention to resell has changed. Earlier you had an intention to resell, but now intention to resell has changed. You are no more reselling them. Got it, friends? That's why purchase account should be credited, friends. Sir, are these only 5 situations? No sir, there are so many other situations also where purchase account will be credited, but at this stage in CA Foundation, at this stage we will restrict ourselves only to these 5 situations. Okay, when you come to special transactions, okay, like your consignment, joint venture and all this stuff, you will have more discussion about this one. Okay, where purchase account will be credited, you will have more and more situations coming up. Got it, friends? That is the case. Right, sir. My first discussion about special cases is done. Right, sir. I understood. As per my schedule, what is the second one? My special transaction in relation to capital, friends. Okay. So let us start with our second discussion, ma, in relation to what? Capital. Already in relation to capital, we have already discussed. When owner introduces money, we call it capital, and when owner withdraws the money, we call it as drawings. Correct, ma? So accordingly, we have seen a situation, an example also. Now let us elaborate that. Okay, but in this example, what is happening is owner started business with cash, let us say. Then what will be the journal entry, my dear friends? Cash account debit to capital, obviously to capital account, correct, ma? Because business is receiving money, cash will increase, cash increases, asset increases, debit. Capital is a part of liability. When owner gives us money, liability will increase. Liability increases, credit. Cash account debit to capital. This everybody understands. But imagine owner started business with furniture, for example. Furniture. You can take the same example for any fixed assets and long-term investments, friends. For any fixed assets and long-term investments also, you can take the same example. If owner with starts business with furniture or this one, so then what will be the situation, my dear friends? I can say, see, if cash is introduced, cash account debit to capital. But if furniture is introduced, simple furniture account debit to capital. Furniture account debit to capital, simple. If owner introduces furniture, we will take furniture. Sir, he introduced some other fixed asset, sir. No problem. I'll take that particular fixed asset only. Account debit. I'll take that only. Sir, he has introduced investments, sir. No problem. Investments account debit to capital. Whatever he introduces, the same thing, I will take it. But the scenario is this way. I told only for any other fixed asset or any other long-term investment. Okay, nama. But imagine owner started business with stock or goods, whatever be the case. What did he do? While starting business itself, his personal stock he brought into the business. In this case, you cannot call it as stock account, friends, but instead stock account is represented with what, ma? When goods enter into the business, we are representing with purchases, correct? So we have to treat it as purchases account debit to capital. Very important. Many people usually miss on this particular journal entry, friends. In this case, they will miss. Okay, when owner introduces capital, that too in the form of stock, try to understand, it is something like business is purchasing stock from the owner himself. Got it, friends? That's why, because business is taking the goods, we call it as purchases. Because it is from the owner, whatever be the money we have to pay to the owner will become our capital, business capital, correct, ma? So that's why we will take it as purchase account debit to capital. Purchase account debit to capital. Good, sir. I understood that also. Next, sir, imagine if owner started business with personal loan with what, ma? Personal loan, and that personal loan is transferred. Personal loan is transferred to business. Very peculiar transaction. Owner started a business, right, sir? No problem. Owner started a business. Good. But in what way? His loan he transferred to business. Normally his personal loan, friends, which he has to repay, that personal loan he transferred to business now. Okay, in that case, we are taking up his liability. So obviously his capital will decrease. When I take your liability, say for example, friends, I have to pay you money. For example, okay, don't call me and ask me for money, okay? But imagine I have to pay you money. Now, you told, instead of paying you money, you pay to somebody else. I will pay. Once I pay, my liability to you is also closed. Correct, ma? For example, I have to pay you 5,000 rupees. You went and purchased a dress. And you asked me, yeah, sir, you please pay 5,000 there, sir. What I will do? In your name, instead of paying you, I'll pay there. Obviously, my liability that I have to pay you 5,000 is also closed. Correct, my dear friends? So obviously, my liability will be closed. Okay, ma'am? It's fine. But here what is happening? I'm taking over owner's liability to the business. So obviously that liability becomes business liability. So when it becomes business liability, so I will take it as to liability. What will be the liability? For example, it's a bank loan to bank loan. Otherwise, it is something else. So what will be the case? What will be the liability? I will take it as liability. But because I have taken up the liability of the owner, I assume that I have indirectly paid him. Once I indirectly pay him, what will happen to his capital, ma? Capital account will decrease. So capital account debit to liability account. This will be my journal entry. Capital account debit to liability account will be my journal entry, my dear friends. Got it, friends? Capital account debit to liability. Got it, everybody? Okay. So that is the case, my dear friends. Next, imagine if this everybody knows. Business pays owner's expenses, and that too personal expenses. Imagine, I'll be more clear about this. Okay, who is paying whose expense, ma'am? Business is paying owner's personal expense. Personal expense means what? It can be something like, we are paying owner's rent, owner's house rent, or we are paying owner's insurance policy, health insurance policy, okay, or personal life insurance policy, or business is paying owner's daughter's school fees, or business is paying jewelry of owner's wife. Understand? Like this, it can be any situation, friends. But ultimately, business is paying owner's personal expense. In that case, we should call it as what? Drawings. Correct, ma? We should call it as what, ma? Drawings. So we'll take it as what? Drawings account debit to cash or bank. Let it be any case. Drawings account debit to cash or bank. This everybody knows this very well. If owner withdraws the money, okay, or if the owner, instead of owner, we only paying the expenses, also same journal entry. It is indirectly that we are paying to the owner. Correct, ma'am? Okay, let me just take out few more papers for you. Okay, chalo. So that is the case, my dear friends. Let me go much more in depth now. Much more in depth we will go. Okay. When we go much more in depth, sixth situation. My sixth situation is if owner pays business expense. So here what is happening? Owner, out of his personal money, he is paying business expense. Understand? But ultimately expense belongs to business. So obviously that expense I will recognize. Expense account debit. Now this expense actually who has to pay? Business has to pay. But who is paying? Owner is paying. Because owner is paying, I have to return to him. Whatever business has to return to the owner, we called it as what, ma? To capital. To capital account. Expense account debit to capital account. Whatever owner has to repay to the owner. Okay, na, ma? Right. That is my sixth situation. Next situation. Imagine, okay, if owner pays for the goods purchased. So what did we do, my dear friends? We purchased the goods. We means business. For the sake of business, we purchased goods. But who paid the money? Owner paid the money. Okay, nama? Owner paid the money. In this case, same like above. So what will happen? Because when we purchase the goods, it is business purchase. So I will say purchases account debit to, because that money has to be paid by owner, business has to return that money to the owner. So it will become part of the capital. Purchase account debit to capital account. Purchase account debit to capital account. Okay, sir, I understood this. Now owner paid the money for purchase, nama. Next scenario is if owner receives amount relating to goods sold. What is happening? Goods sold. Whose goods, sir? Business goods sold. Okay, business goods sold. But who took the money? Owner took the money. Understand? Whose money is that? Business money taken by owner. Ma, business money taken by owner, we called it as what? Drawings account debit. And that sales actually belongs to owner sales. Is it the sales of the owner or business sales? It is business sales. Because it is business sales, I will take it to sales account. Drawings account debit to sales account. Drawings account debit to sales account I will take. Got it, friends? So these are some of the peculiar transactions that comes in our capital account, friends. Okay, discussion number 2 in relation to our special cases. Okay, now first we have spoken about where purchase account will be created. Now we have discussed some special case in relation to capital account. Got it, friends? Let us move on. What is my third discussion as per the schedule? Asset related transactions. My dear friends, when it comes to asset related transactions, we will learn more and more journal entries in depreciation chapter, a separate chapter, my depreciation chapter. There we will learn in depth of it. But now let us restrict ourselves only to a few certain journal entries, that is in relation to assets. Okay, in relation to assets. Okay, so what are those, sir? First of all, imagine book value of asset. Book value of asset is Say I have 1 lakh rupees, my dear friends. It means, what is the meaning of book value, ma? In my books of accounts, the asset value is 1 lakh. You will get more clarity on this book value when we are discussing depreciation chapter, friends. Wait till then. 1 lakh rupees. But what did we do, you know? I have sold it. I have sold it. While selling, let me take 2 different cases. I can sell 3 different cases. I'll take it. Okay. Book value is 1 lakh. Okay. For you to understand a better way, I will take the purchase cost also. Purchase cost. Purchase cost is 1,20,000 rupees you have purchased. Okay. You purchased it for 1,20,000 ma. But in your books, the value is 1 lakh. Okay, na ma. Now you are selling it. You are selling it for how much, sir? First case I will take. You are selling at 1,10,000. 1,10,000. First situation. Second situation, exactly 1 lakh you are selling. Third situation, you are selling it at 95,000. You are selling it at 95,000. And try to understand this point very, very carefully. Now, 1 lakh. Now, if at all you start thinking, sir, 1,20,000 rupees I purchased and I'm selling it for 1,10,000. 10,000 loss. Wrong, friends. You're absolutely wrong. You should never compare purchase cost with the selling price. No, you should always compare with your book value. What is the value of that particular asset in my books now? Current book value only you have to compare. If you compare like that, friends, 1 lakh and 1,10,000. Book value is 1 lakh, but you sold it for 1,10,000. It means in this example, you made a profit of 10,000. Always compare it with your book value. Now, book value 1 lakh, sold it for 1 lakh. So, what is this situation, friends? No profit, no loss. No profit, no loss. No profit, no loss situation. Correct, ma? And 1 lakh asset, I sold it for 95,000. Here, what is happening, friends? I'm getting a loss of 5,000. Correct, ma? Obviously, 1 lakh rupees asset sold for 95,000. 5,000 rupees loss. Now, how do we actually recognize these 3 cases? I'll take them as case 1, case 2, and then case 3. And then we will discuss the journal entries. Got it, friends? Now let us jump into the journal entries, ma. I hope I am clear with this, ma. Again, I am explaining you. Please observe. You should never compare with your purchase cost. You purchased for 1,20,000, but I never compare it with 1,20,000. You should always compare with your book value. How much is the value of the asset as per my books of accounts? You have to think. Okay, ma. 1 lakh rupees sold for 1,10,000. Made a profit of 10,000. 1 lakh rupees book value sold for 1 lakh. No profit, no loss. 1 lakh rupees sold for 95,000, making a loss of 5,000 rupees. So in these all 3 scenarios, what will be the journal entry? Let us jump into it and see this, ma. See this, ma. See this. Okay. Okay. Now, friends. So, first case, you made a profit, right? You made a profit by receiving how much, ma? 1,10,000 rupees. Correct, ma? See, actually, book value is 1 lakh, but sold for 1,10,000. So obviously in this transaction, you are making a profit of 10,000. 10,000 profit. So how do I recognize this profit, sir? Observe very carefully. So what I will do is, I'll start making, first of all, you received the money, namma. So I will say cash or bank account debit. How much did you receive? 1,10,000 rupees you received. But in your books, that asset will go off. So once your asset is off, your asset value will decrease because you sold it, namma. There is no more asset in your books. Assets value will decrease. Asset decreases, credit to asset. How much, my dear friends? 1 lakh rupees the book value. I will take it as 1 lakh rupees only. Only book value. Now 1 lakh asset sold for 1,10,000, making a profit of 10,000. That 10,000 I will take it to profit on sale of asset. I'll call it as profit on sale of asset account. This is my journal entry when I sell my asset for profit. Okay, namma? Right, sir. Then what next, sir? Now we have second scenario. What is my second scenario, ma? Book value is 1 lakh. Book value is 1 lakh and sold also for 1 lakh. So obviously what is here? Are you making any profit or loss? No profit, no loss. No profit, no loss. So what will be the journal entry here, my dear friends? Very simple. Cash or bank account debit. How much are you receiving? 1 lakh rupees you are receiving to asset. How much is that, my dear friends? 1 lakh rupees you are going to receive. You are going to receive how much, ma? 1 lakh rupees. Okay, na, ma? Cash or bank account debit to assets, 1 lakh rupees. Got it, sir? I understood this point also. Now, what is my third situation, ma? Book value is 1 lakh. But you sold for how much in my third example? Sold it for 95,000 only, making a loss of 5,000 rupees. Making a loss of 5,000 rupees loss you have made. Okay, Nama. In this example, how do we treat that? Simple. How much are you receiving? Cash. Cash or bank account debit. How much are you receiving? Only 95,000, because you have sold it for 95,000. You will receive only 95,000. Right, ma? Leave one line space. Two assets. So because you sold the asset is no more in your books of accounts. Two assets. But how much is the book value of the assets, ma? 1 lakh rupees the book value of the assets, sir. So assets will be decreased by 1 lakh. No problem. So 1 lakh asset is sold for 95,000, making a loss of 5,000. What is this, ma? Loss on sale of assets. Account debit. So this is going to be my journal entry for loss on sale of fixed assets. Got it, friends? So cash or bank account debit, loss on sale of assets account debit to assets. So this is how, whenever I sell my assets, will it be for profit? If it is profit, friends, journal entry is going to be cash or bank account debit to assets to profit. If it is no profit, no loss, just cash or bank account debit to assets. If it is meant for profit, my difference, cash or bank account debit, loss account debit to assets. So these will be the journal entries whenever you sell your assets. Sorry, sir. I understood these points. Now let us take two different examples. Now imagine, what are you trying to do is, you are trying to convert your stock into asset. Okay, stock into fixed asset, for example. Stock into fixed asset you are converting. Or vice versa, fixed asset into a stock. Both the situations we will see. What are you trying to do here? You are trying to convert stock into fixed asset. Say, let me take an example for you so that you'll understand. Okay, Nama? Imagine you are a furniture dealer. You are a furniture dealer. So, for being a furniture dealer, what will you buy and sell? You'll buy and sell furniture. Obviously, everybody knows this. We buy and sell furniture. Okay, sir. While buying and selling furniture, friends, observe very, very, very carefully. Okay, observe very carefully. At the entrance, I will have one table, Namma, where owner sits. That is also furniture. But that furniture is meant for resale? No. That furniture is meant for use. Correct, ma? Owner's cabin, ma. Owner's cabin also will have a table and chairs and all this stuff. But are you going to sell them? No, you are going to use them. Okay, Namma? So that is stock, that is for fixed asset. But what are the furniture available for sale? They are all stock. So in this example, what I am trying to do is, you have taken stock and converted into fixed asset. It means what? Earlier your intention was to resell, but now you are not reselling it, you are using it as your fixed asset. For your business purpose, you are using it. For example, you have taken one table and using it for your administrative works. Understand, ma? But earlier that asset was, the table is meant for resale. Get my difference? In that case, what will be the journal entry? Because your intention to resell has changed. What did I tell you, ma? First scenario, where stock is converted into fixed asset. Stock is converted into fixed asset. Understand, ma? Stock is converted into fixed asset. So in that case, what will happen? Your intention to resell has changed. When your intention to resell changes, so what will happen, my dear friends? Your purchase has to decrease. Just now we discussed. Remember, where intention to resell has changed to purchase account, and to that extent, what will happen? Your fixed asset cost will increase. Obviously, I'll call it as fixed asset account debit to purchases. So here, whatever be your intention to resell has changed, so obviously your purchase will decrease and fixed assets will increase. That's fine, sir. Just now today also we discussed that point. That's okay. Second scenario, where fixed asset is converted into stock. So what are you trying to do, my dear friends? Fixed asset is converted into stock. You're trying to convert fixed asset into your stock, my dear friends. In this case, what will be the journal entry? Friends, what will be the case? Stock is coming into our business number as a new entry. So obviously, the stock, when we are taking an entry in the name of stock, so obviously purchase expense has to increase because that item is now meant for resale. Correct, amma? That item is meant for resale. So obviously, what I will do? Purchases account debit. I will increase the purchase because I'm getting a stock, new item into my stock. And because it is no more a fixed asset will decrease to fixed assets. To fixed assets. To fixed assets. Purchase account debit to fixed assets. But most important point that you have to understand is the amounts. Amounts, I will tell you, friends, when you are converting your stock into fixed assets, friends, you will convert that in at cost. You will convert that at what price, ma? Cost price you will convert. Whenever you convert your fixed asset into stock, you have to do it at fair value. You have to do it at what value, ma? Fair value. You have to do it at what price, my dear friends? Fair value. Sir, what is fair value, sir? Wait for a few days, friends. You will understand. But now you please remember one point. That is, whenever you are converting stock into fixed assets, fixed asset account debit to purchases, and it has to be converted at cost. Okay. Whenever you are converting fixed asset into stock, purchase account debit to fixed asset, and it has to be converted at fair value. What is fair value? What is cost? Wait for a few days, friends. You will get to know the details of it. Got it, friends? Okay, so these are the transactions which I thought I will discuss this with you. Okay, nama? When fixed assets are converted related into fixed assets. So as per our next transactions, we have bank related transactions. Last category of transactions, my dear friends. With this, we will stop our today's class. Okay, nama? Bank transactions. First transaction. If we deposit cash into bank account. If we deposit cash into bank account. So what are we trying to do? We are taking our cash and going to bank and depositing into the bank account. So obviously what will happen, ma? Both cash account will be affected and bank account will also be affected. Cash account will be affected and bank account will also be affected. Now cash and bank both are assets only. Now if at all you deposit your cash in hand, physical cash in hand will decrease, and once physical cash decreases and your bank balance will increase. Kadama. So when cash asset decreases, what you will do? Credit, and asset increases, what you will do? Debit. You will increase it. So in this case, what is happening with this, friends? What will be the journal entry, my dear friends? Bank account has to be debited, cash account has to be credited. So journal entry will be what, ma? Bank account debit to cash account. To cash account. So this is the journal entry. When I deposit cash into the bank, cash will decrease credit, bank account will increase debit. Got it, friends? Very simple, not an issue. But the second scenario, if we withdraw cash from bank account. So what have we done? We went to bank and withdrawn cash from the bank account. So with this, what will happen, ma? Reverse. Bank balance will decrease, cash balance will increase. So what will be my journal entry? Reverse of this journal entry. So cash account debit to bank account. Cash account debit to bank account. Cash account debit to bank account. Simple journal entry, not an issue. But here, some students does a mistake in this. So some students will actually do a biggest mistake is whenever they say withdraw, they will immediately treat it as drawings, my dear friends. It's absolute blunder. Owner is drawing the money not for his personal purposes, friends. Instead, he is actually drawing for business purpose only. Withdraw cash, that's it. Not for personal purpose. If it is only for personal purpose, it will be drawings, my dear friends. Whenever some students, I have seen many students, friends, out of my experience since last 10 years of teaching for CA Foundation, whenever they see withdraw, immediately they'll start writing drawings account debit to bank, which is absolute blunder, my dear friends. You can use drawings only if it is meant for personal purposes. But here this cash is not meant for personal use of the owner, but is meant for business use only. Understand, friends? In that case, cash account debit to bank account. Okay, sir, I understood this point also, sir. Most important point that I want to discuss. It is the most important point of the entire today's class, friends. Very, very important class. What is the difference between bank account and bank overdraft, sir? What is the difference between bank account and bank overdraft account, OD account? So many people will have a question on this. Okay, bank account and bank overdraft. Sir, are they both different, sir? No. They both are same only. Huh? Sir, bank account, bank overdraft, both are same. Have you gone mad? Yes, we have gone mad. I'll show you how actually bank account is and bank overdraft are same. Okay, Nama? Imagine, what is today's date, ma? Around 15th of July 2020, I have a balance in my account. Okay, my bank balance is about, say, 10,000 rupees. Okay, what I've done, I immediately I have withdrawn some amount, friends. Withdrawn. Okay, say some 2,000 rupees withdrawn. My balance will become how much, ma? 8,000. Okay, and I gave a check. I gave a check to somebody. Okay, amounts to 7,600 rupees. Okay, will that be passed? Yes, it will be passed. Okay, imagine minimum balance is also not there and my balance will become 400 rupees. Now, what bank has done, you know, bank made some bank charges. For example, check processing charges or ATM card charges, okay, ma'am, debit card charges or mobile banking charges. Some banks will charge actually. Now, that bank charges came to 600 rupees. Now, your bank account will show a negative balance of 200. Bank account will show a negative balance of 200 rupees. Correct, amma? Whenever, see, in all these cases, you have 10,000 bank balance here, 8,000 bank balance here, 400 rupees bank balance here. If at all you have positive balances, I will call it as bank account. If at all I have positive balance in my bank account, I call it as bank account. But if the same bank balance converts negative, if it goes negative, I call it as bank overdraft. What does it mean, my dear friends? Account is same. There is no change in the account. Account is same. Only thing is, if it is positive, I call it as bank. If it is negative, I call it as bank overdraft. If it is positive, my money is with the bank. It is a part of my assets. If it is negative, friends, I have to pay to the bank. Obviously, I have to pay 200 rupees more to the bank. It becomes my liability. Item is same. Item is same. Understanding, friends? What does it mean? For example, I have only one account in ICICI Bank, ma. Okay, ICICI, I have only one bank account, friends. What does it mean? In the same account, if it is positive balance, I'll call it as bank account. If it is negative, I'll call it as bank overdraft. Everybody knows this. Just now we have discussed. Correct, amma? Okay. Can I say same account will be bank account and bank overdraft together, sir? No chance. Either bank account or bank overdraft. Same account, only one single account when you have, either it will be bank account or bank overdraft. Only one scenario will arise, not both. Got it, friends? Imagine I have HDFC bank account also. Now, imagine ICICI Bank is positive and this account is negative, for example. ICICI positive, this bank, then I can say bank overdraft will be there. Bank overdraft is there. Yes, now I can say bank account is also there, bank overdraft is also there, because they are not same account, they are different accounts. They are different accounts. One account is having positive balance, other account is having negative balance. I can definitely have that. Otherwise, the same account can never be bank account and bank overdraft together. It cannot be, my dear friends. So whenever in any question or in your lifetime, whenever you see bank and bank overdraft in the same balance sheet or in the same books, ensure that they are not same accounts. Okay, if they are same accounts, it means you are doing some mistake, you are doing some wrong in treating the journal entries. Got it, friends? In treating your accounts. Okay, now friends. So with this, I would like to stop today's class, friends, with the bank transactions and all. So tomorrow at 4 o'clock, we are going to discuss all the textbook questions out of your ICAI material, which is meant for May 2020 and later on. Keep your textbooks ready, friends. Keep a calculator, keep your textbooks, keep a notes ready, so that tomorrow we'll discuss textbook questions of journal entries. Got it, friends? Thank you so much for your participation. Thank you so much. Bye, friends.